please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The earnings season is upon us and it's awaited with bated breath. At long last, will Indian corporates deliver higher corporate earnings and double-digit corporate earnings? Hello and welcome to our quarterly special, Quarter Se Quarter Tak. I'm Lata Venkatesh. With me, my colleague Prashant Nair. Hi, Prashant.
Hi, Lata. So let's just set it up, right? I mean, in terms of the big questions that need answering in the next 60 minutes or so in this particular quarter, the third quarter. So let's just put those 3 or 4 top questions up. The first and the most important, basically, has the earnings recovery started? People have been waiting for it for a long time. Will it start this quarter? If yes, can the Nifty companies deliver double-digit earnings growth this quarter? That is the point number 2. And the third question, will the earnings growth be more than just the base effect of demonetisation? And finally, which sectors will see the maximum rebound in earnings? Those are the most important questions that we're going to try and tackle across sectors over the next 60 minutes.
And to answer these questions over the next 1 hour, joining us are Gautam Dugad, Head of Research, Institutional Equities at Motilal Oswal Financial Research, Nishchal Maheshwari, Head Institutional Equities at Edelweiss Securities, and Sanjeev Bhasin, Executive Vice President Markets at IIFL.
Okay, let's go straight across to Varinder Bansal, who's standing by with a top-down view of what we can expect from this earnings season. Varinder, over to you.
Well, thank you so much. This is one quarter I think everyone has been waiting for, at least the second half of the financial year. All the reports what I'm reading is that they are saying that the bounce will come in the earnings this quarter. Everyone is hoping for the double digit. 15 to 20% is the PAT estimated growth for most of the brokerages on street. And look at what Motilal Oswal is saying. The one important thing is that this earnings season will be helped by cyclicals and also because of the demonetisation, low base effect which will come into the place. So all the demonetisation impacted sectors, whether it is FMCG, autos, retail, durables, media, will get boost because of the low base. But also the considerable push will also come from the cyclical sectors, you know, whether they have the high base or not. But metal, oil and gas, PSU banks, NBFC. So you are going into the earnings season with a lot of hope this earnings quarter. And one important thing is Motilal, as I said, is expecting a PAT growth of 18%. If that gets delivered, this will be the best, highest growth in the last 14 quarters for Nifty. That says it all. But the sectors which you have to keep an eye on, I think almost everyone. Autos is one sector which everyone is bullish on. Consumer, industrials, these are the ones to watch out for. Even utilities is one sector to watch out for. I'm sure, you know, the research analysts, our peers will be mentioning about metals where Hindalco, JSW, Tata Steel expected to see a profit jump of 4 times, 3 times, 2 times. Ditto is the case with Ashok Leyland, a jump of 2.5 times in terms of profit. So the entire chart will come on your screen. But as I said, we are going into the earnings season with lots of hope. Double-digit profit growth, the best in the for last 14 quarters if we achieve that 18% mark.
Okay, thank you very much for that overview, Varinder. And now it's over to Gautam, Nishchal and Sanjeev to give us a little more color. Well, Gautam, since your report was anyway quoted by Varinder, if it is indeed going to be an 18% profit growth, what are you all working with for this year itself, FY18 earnings growth, if 18 is delivered?
Yeah, thanks. So our Nifty EPS estimates haven't changed much. In fact, for the FY18 year, this quarter we have raised the estimates by around 1%. Our EPS estimate for FY18 for Nifty stands at somewhere around 487, and that will translate into a growth of roughly 15%. Now, what does that imply? That basically implies that this quarter we are expecting 18%, and that leaves the fourth quarter growth for our MOSL universe at around 29%, which is pretty rich and obviously helped to an extent by low base. This quarter we are expecting 18% for Nifty and around 20% for our broader MOSL universe of companies. And as Varinder mentioned in the beginning, this is not a quarter which is entirely led by the low base of demon. In fact, we have pointed out what are the growth rates for different sectors. We have actually divided our entire set of sectors into 2 parts, where we are expecting around 25% growth from demon impacted sectors because of the low base. But at the same time, the non-demon impacted sectors, we are expecting a growth of 18%. So even sectors with high base, the likes of metals, oil and gas, NBFC, they are also expected to see a very strong performance. So clearly, as you've titled our report, this is actually looking like an end of a drought of earnings season, and the quality of earnings which we have seen improvement, which began in 2Q of FY18, that story continues. In fact, we are expecting the lowest number of companies in our universe in the last decade to report a YOY decline.
Okay, that sets it up nicely. Nishchal, let me get a quick word in from you. 18 to 20% achievable this quarter?
Yeah, it seems like basically that's what we have put out our earnings growth, basically around 18% kind of a growth of our coverage universe. I agree with Gautam out there, basically, that the ask for the last quarter is pretty steep. And I believe that's going to be a challenge to achieve that. And you might see the full year numbers not getting achieved, some downgrades happening. Again, I think the interesting part is that the next year also, if I look at various numbers out there, so for FY19, we are ourselves projecting around 25% kind of a growth. So I think those are the things basically one should look out for, because if the growth recovery is not strong, then I think some number cuts are going to happen even in FY19 also.
What is your FY18 full year number, you said, Nishchal?
So we are projecting around 495 for Nifty.
Okay. All right. Sanjeev, what would be the failure sectors at all? I mean, what would be the failure standards? What number will you say, oh, this quarter has not delivered?
So anything less than 14 to 15% will be considered weak, Lata, and you have to take three tailwinds which have become now headwinds: rising bond yields, crude, and the spurt in base metals. Base metals are very good for the producers, but they are going to be really harmful for the manufacturers. How can L&T sustain margins if copper and lead and the other base materials are going to be so high? Just as a caveat. So I'm saying if you took a mix, yes, maybe some will do 15 to 18, but I still think 12 to 14 or maybe maximum 15 is where we are getting, and that's why we think that the market could be slightly ahead on discounting a large amount of move, which may be correlated to the base effect of last year. But like I said, these three headwinds now are going to what you have to be accustomed to going forward.
Oh, yes.
All right, gentlemen. So that's basically the broad view in terms of what third quarter may look like, the expectations from the fourth quarter, and of course, what it means for the full year. Let's get sector specific now and dive straight into each of the most important sectors. And first up, we're looking at the IT sector. Anisha, my colleague, is here, and she's going to detail some of the more important matrices that she would track in the third quarter from IT companies. Anisha, over to you.
Seasonality, holiday season and the furloughs are expected to creep into the IT companies' number this quarter. Also remember, there is no currency tailwind this time sequentially, though year on year it might just bump up the revenue and margins by 100 to 200 basis points. Also the analysts expect the mid-cap companies to fare better than the frontline companies. The key thing to watch out for this particular quarter is the commentary regarding 2018 budgets as well as commentary on BFSI and retail. Now in terms of the brokerage, CLSA says the demand is expected to remain weak, and that's why ahead of the earnings season they have already cut their EPS estimates. Kotak says that the organic constant currency growth can be around 1 to 1.8%. Edel says that HCL Tech and Tech Mahindra is expected to lead the rally, while Wipro as well as TCS and Infosys are expected to grow at a slower pace. CLSA also maintains the view that they expect HCL Tech to grow by 2.6%, while the likes of Infosys by just around 1%. Back to you.
Anisha, thanks very much for that. So that's basically what we're expecting from the IT space. Anisha, let me put this to you. What's your sense from the space? I mean, valuation-wise, IT still ranks as some of the cheaper stocks in that space as compared to the rest of the market, but growth has been a problem. Do you see it picking up?
We do not see much signs of pickup as yet. Basically, I think the sector still seems to be struggling. If you look at the kind of the kind of outlook which most of these companies have been talking the last quarter, I still do not see a very sustainable recovery coming back into the thing. Yes, I think the street has been hopeful that given that there is these tax cuts which are there, so it will have more, put more money in the hands of the companies, and that might see start the recovery as far as discretionary spend is concerned, but still to see signs of recovery happening in the IT sector.
Okay. Well, Sanjeev, just a very specific question on the first two numbers that will come. TCS, Infosys, our average revenue growth poll has thrown up 1%. What do you think? Are there greater chances of a surprise or a shock?
No, I would say it would be in line. Maybe you get a bit of a surprise on the upside, because I think a lot of pessimism has played out over there, and we've seen a lot of traction on the order flow, all in the BFSI space. So could be that you get an upping of guidance. I would not be too much upbeat about the two names you've said, but HCL Tech, according to us, and say a Mindtree, they could stand out because we've seen a lot of traction, a lot of order flows, and the management commentary sounding very, very optimistic from both those companies. So Tech Mahindra again would be a added beneficiary because of the pound, for which it has had to have a lot of adjustment because of the BT business. So I think it will be stock specific for the names you made, particularly TCS, Infosys. I think TCS may slightly up its guidance, and that could surprise the industry. At least that's what the stock price is indicating.
All right, Sanjeev, let's move on to the automobile space, the auto sector. Volume numbers, which we get every month for most auto players, has been actually pretty good. Even the lagging commercial vehicle segment is picked up. But what could the quarter look like, both from a revenue and profitability perspective? Sonia is here with a preview. Sonia, over to you.
Thanks a lot for that. Well, it's expected to be a strong quarter for the auto sector. The base is very low because of demonetisation last year, so the growth rates may look spectacular. But not just that, demand has been good across the board, whether you talk about the commercial vehicle space or even the two-wheeler space. Revenues are likely to improve about 18 to 20% across the sector. The festive demand was much better than what we saw last year this time around, and that will reflect in this quarter's performance. So just to take you through a couple of stocks, Maruti Suzuki is expected to see about a 14-15% revenue growth, led by 3% higher realizations. We did see their products like the Baleno, the Brezza boost volumes and the product mix this time around, and that will lead to higher margin performance as well. Remember, the government has mandated compulsory air conditioners in commercial vehicles, and by the 1st of January, and because of that we saw a lot of pre-buying in the months of November and December in the commercial vehicle space. That will lead to a boost in the earnings for names like Ashok Leyland, Eicher Motors Commercial Vehicles Division, etc. For Ashok Leyland, we're expecting revenues to grow by 50%, led by 42% year-on-year rise in volumes. Hero MotoCorp would be a bit subdued. There's still a 15% revenue growth that we're expecting. However, we've seen a recovery in rural markets, and that would really benefit a lot of the spaces like tractors and the SUV makers like M&M. So all in all, expected to be a good quarter for the auto industry.
Okay, well, auto industry is one place where we kind of get a monthly update on at least volume sales. But Gautam, your company tracks all these very well, and they are present in almost all your funds. What can be the wild card? Which is the one company that can be a way out surprise or shock?
Yeah, so I think auto, as your journalist was mentioning, has a very low base. So if you remember, the base quarter had a 35% decline for our universe on profit. And on that, we are expecting a 75-76% earnings growth. Now, obviously, auto always has a lot of deviations because of Tata Motors. So I always look at auto excluding Tata Motors. Excluding Tata Motors also, we are expecting a growth of around 22-23% on profit. So that is pretty decent and healthy growth, and even the monthly numbers have been pretty robust. One of the important things you have to remember when you look at auto is that it is one of the big beneficiaries of the rural consumption pickup that we've been expecting for the last 6 months. And we have seen a good surprise last quarter from M&M. And I think M&M's numbers this quarter will also be pretty good. In fact, we are expecting 30% growth on M&M. We have increased the weightage of M&M in our model portfolio. We've taken 100 bits away from Maruti and added that to M&M. So that is one thing, that is one company where I'm expecting very strong performance. Apart from that, I think Maruti at around 16-17%, TVS 20%, Eicher 30-31%. Ashok Leyland, obviously 50% top line growth will result in big operating leverage, and they should report a profit somewhere around 400 crores, which will mean 2.5 times jump on a low base. But one of the companies where I would be very, very interested and excited about is M&M, because that is where we are highlighting it as one of our very preferred rural bets.
Okay, so we'll keep an eye out on M&M as Gautam points out. Gentlemen, stay with us. We will take our first break here on the show. When we return, we get you more sector-specific preview. Banks, metals and FMCG follow after a quick break.
Welcome back to our earnings special quarter se quarter tak. We've been looking at the IT sector. It's time to look at the other big boy, 45% of the listed stocks, banking sector. Abhishek, first you tell us what are you expecting?
Loan growth has picked up in the sector at 10.7% for the December quarter, but that is coming off on a lower base in December 2016 when demonetisation took place. So overall, while the loan growth has been increasing, slippages have been drifting downwards, and that trend is expected to continue in this quarter also. But be wary of the rise in bond yields, which can impact the mark-to-market provisions or the treasury gains of majority of the bankers. Elevated provision is seen for corporate-based bankers like ICICI Bank, Axis Bank, etc., while the bankers' comments with respect to the second list of NCLT and the provisions made thereof will be seen very closely.
Abhishek, thanks very much for that. That's a big sector. Nishya, let me come to you. What is your sense from that particular space? Will we finally see the peaking of stress in the banking space? Will it be meaningful in the third quarter?
I think so. Basically, according to us, I think this or the next quarter should peak out basically as far as stress is concerned, as far as NPS is concerned. And that's why we have slightly more positive on the PSU banks in the current quarter. And we see close to around 14 to 15% kind of earnings growth for both the PSUs as well as the private sector bank. But obviously our preference is for the private sector banks, because there we see a sustainable kind of a growth happening. In case of PSU, still I think the big question is how you're going to see the growth coming back, and whether they have enough capital basically to look at the growth. So I think, yeah, current quarter is going to be better, but I think the preference is for the private sector banks.
Oh, yes. And then, of course, there is that inexplicable problem of divergence. So you never know exactly what you're looking at in terms of numbers. Take your point about corporate lenders as well as public sector banks. But let's get to the next big sector, which is metals. Nigel is here with what you can expect, and that's the one that may probably deliver that big 70% profit growth. Nigel, what are you expecting?
Well, metal companies have had a dream run, and in fact, the prices that have increased in the last quarter will, reflect in their numbers. On a year-on-year basis, both ferrous as well as non-ferrous, we have seen price hikes. Just take a look at the non-ferrous counters over there. You've had, hikes in LME metal prices by nearly around 20 to around 25%. And in terms of ferrous companies as well, they have hiked their HRC prices as well as long prices by nearly around 1,000 to around 2,000 rupees. Some of those non-integrated players, though, they'll get hit, like a JSW Steel. I know prices have gone up, and that's what will hurt them a tad bit. And towards the end of the quarter, coking coal prices as well did come in higher. JSPL, those numbers will look very, very good. Remember, demand for pellets did come back in the past quarter, as well as long prices did hike up. So that's what will help them. You had SAIL, where the ministry has been sounding quite confident. In fact, prices have moved up over there as well. So SAIL should look good. Coal India, volumes will look good, though EBITDA will not look that great, because we have seen wage price hikes that came through in the last quarter, while for Vedanta, they'll look good, because in fact zinc prices have been more or less steady, and oil and gas as well has bounced back.
All right, thanks, Nigel. Well, Gautam, surely it's going to be a brilliant performance. We already have one Prakash Industries whose numbers look very good. What will be the one thing you will look forward in the metal space this quarter?
So, as I mentioned in the beginning, metals is going to perform well this quarter on the back of a very high base. So 80% growth, and last 3 quarters also, if you remember, has been a triple-digit growth for the sector as a whole in our universe at least. So it's actually benefiting from 2-3 factors: price, volume, operating leverage, and then you also have some deleveraging plays which are, helping at a margin. And what is good about this quarter is that this growth is very broad-based. I mean, I have not seen such a broad-based growth in metals for some time now. It's something like NBFC, where we are seeing very broad-based growth across the spectrum. So metals, what one needs to be very cautious about is going forward from 4th quarter of FY18, you are going to encounter a very high base. So at least for our universe, we are expecting the growth moderating from 80-100% that we have seen over the last 3-4 quarters to somewhere around 20%. But then metals is always a function of LME, dollar index, and what is happening in China. So while I have been having this view that the stocks have gone up 4x, 5x in last 2 years, growth is going to taper off, and therefore it makes sense to be a little more cautious on that space and take some profits off the table. But then I had this view a quarter back, and since then the stocks have not corrected. But I would be far more cautious around these names now than I was even last quarter.
Well, absolutely, and maybe the burden of proof for the sector, because the stocks have run up so much, is on results. I mean, earnings have to come through. They will, as Gautam said, but maybe 4th quarter will look a little tougher. Let's move on. It's time to take a look at what we can expect from the entire FMCG space. FMCG, of course, deals with a low base last year, but also there were GST-related tax changes for the space. Mangalam is here with what to expect from the FMCG sector. Mangalam.
For FMCG this quarter, it's going to be all about that base. Tell you what, the numbers are going to look good year on year because we had demonetisation in the base quarter, and quarter on quarter because we had GST related disruption in the 2nd quarter as well. But does the street know that? Of course, all the stocks have been rising and the evaluations for the sector are at elevated levels too. Rural consumption saw a bit of pickup in the last half. Let's see whether that trend continues or not. We saw some rise in input costs, so it'll be interesting to see what the management's commentary on anticipated demand and input costs is likely to be. By and large, for the sector, we're expecting low double-digit to high single-digit growth, primarily coming in on the back of favorable base. So the likes of HUL, Asian Paints, ITC, rather ITC will keep that away because of the cigarette business, expected downtick in volumes there too. HUL and Asian Paints likely to post around 11 to 12% volume growth. And then we have Britannia's, Marico's, Daburs and Colgate's of the world, anywhere between 9 to 12%. Remember, comes on the back of a favorable base.
Okay, and let's get a reaction. Sanjeev, I mean, everything in that space has done well. Look at something like an even HUL, the giant, which has moved up the way it has over the quarter. What's your sense? Will numbers come through?
Well, yes, definitely. I think low yields, the advent of spending, the 7th pay commission, full money coming back, and a whole host of things which have led to a huge boost in consumption spending. So I think lever has been a big beneficiary also of rural sales picking up, and it's evident in the prices. Of course, from a last year's base, I think the price increase in a lot of their personal care products would have helped. But, the likes of Emami, Marico will again tend to surprise on the upside. Our dark horse over there would be ITC. I think, coming to all the verticals like paper, hotels, dairy milk, and the whole host of FMCG, which they are now putting more on the branding side. That could be our dark horse going forward, even though I think cigarette volume may dent the overall picture for this quarter.
Okay, point taken. Well, we have to take a break, but up next, one sector that did extremely well, NBFC, one sector that did very poorly, pharma, and another sector which has winners and losers, oil and gas and telecom. Back in a jiffy.
Welcome back. You're with us here on Quarter Se Quarter Tak. We're looking at the 3rd quarter, previewing it sector by sector. And let's go across to the next space, which is the pharmaceutical space. Ekta is here to set it up for us in terms of what to expect. Ekta, over to you.
Well, it's expected to be another depressed quarter in terms of the US sales for most pharmaceutical companies, simply because of the kind of competition that we've seen, the number of drugs approved, and hence the kind of pricing pressure in the US market. So that's expected to continue. Most companies could probably see up to a 10% year-on-year decline in the US markets. Margins and hence profit will be pressured on account of that. The appreciation of the rupee will be the other thing to watch out for, as other emerging markets, etc., will have their earnings impacted on account of it. But do watch out for India. It's expected to continue in terms of recovery post the GST implementation. Obviously, commentary on US FTA issues will be top of mind for many companies such as Lupin as well as Dr. Reddy's.
Okay, well, I agree that this is a sector where one has to actually pick and choose, and there are no broad brush answers. So, to you, Nishchal, what is the broad brush answer? Winners and losers? Okay, we'll come back to Nishchal in just a minute. Same question to you, Sanjeev.
Yeah, so Lata, like your, the lady pointed out that this could be maybe the last quarter. Also, she didn't highlight that the FDA approvals in this quarter must be the maximum I've seen in the last 18 quarters. And which tells you that the new FDA chair is definitely going to put a lot of more generic pricing back onto the table. So it's a win-win situation for the large producers as they come back after the huge GST and the demonetization devil. So I still think that companies like Aurobindo, Divi's Lab, Cipla can deliver better than expected earnings, and with a lag effect of this quarter, I think Sun, Dr. Reddy, Lupin, you cannot miss the pricing, which is very, very attractive. And with a 1 quarter hiatus, I think they should be back to double-digit gains on the higher side.
All right, Sanjeev, thanks very much. Let's go across to the NBFC space now. Abhishek outlined banks and what to expect from that space, but NBFCs, I mean, the rally, the big unending rally for NBFCs stopped sometime at the end of the second quarter. So earnings will be important. Abhishek is here again with a preview. Abhishek.
Amongst NBFCs, in the gold financing business, Manappuram slowdown in terms of loan growth will be seen closely, while Muthoot Finance is expected to report a strong set of numbers. Amongst the consumer finance sector, the Bajaj Finance is expected to report a strong set of numbers, while two-wheeler sales have been good, so that should aid in Shriram City Union Finance performance. In the housing finance sector, expect the intense competition in terms of interest rate to weigh on the loan growth, while interest rate have been rising in the bond market. That could impact their net interest margin. Among the MFI and small banks, while the rural economy has picked up, this should lead to growth in Ujjivan's profit, while Equita's profit could remain under pressure. Amongst the vehicle financing business, strong CV sales have been seen in Q3 FY18, so that should lead to performance better in terms of Chola, Sundaram and Shriram Transport Finance.
Abhishek, thanks very much for that. Nishchal, various segments as Abhishek outlined in the NBFC space. Which one would you be most excited and which one would you be watching out most keenly for?
On the NBFC space, it's always been about the mortgage business, and we have been quite positive, and we continue to believe there are a 20% kind of a growth is not a challenge as far as mortgage is concerned. Yes, I agree with the...
Okay. Well, I think we have a problem here. Very quickly, Sanjeev, NBFCs pick up the pack?
Hello?
So clearly, Lata, Bajaj Finance has been slightly under the weather because of asset quality, which they indicated last quarter. But I would be putting my money on some of the microfinance companies where I am extremely bullish. So Satin Credit Care, Ujjivan, Equitas, we think the worst is behind us on both the levels of demonetization and farm waiver, and we think those could be relative, the numbers could actually be pleasing on the upside. Shriram Transport would be another beneficiary along with Mahindra Financial, because we think they, because of the parent and the CV cycle moving, they could be added winners on the number front.
Gautam, what would you be looking out for in that space? Any one category?
I think NBFC has been one of the most consistent performers of the pack. If you look at the last 12-13 quarters, this space has registered the most exciting and most consistent growth. This quarter for our universe, we're expecting 30% plus growth, which I think in our universe at least will be the highest in last 23-24 quarters. What I am slightly worried about is this whole cost of funding environment because of the yield rising. So that will reflect at some point of time, maybe a quarter lag or a 2-quarter lag. I would be slightly more cautious there given the valuations, but the growth even this quarter is extremely broad-based. I mean, for our universe, excluding LIC Housing Finance, we're expecting very strong performance across the board with growth ranging from 20, 30, 40 to even 50-60% as well. We have, increased the weightage on Shriram Trans Finance. It is one of the picks which we have highlighted in our contrarian thematic report as well in June. Stock has done well since then, but still we feel there is some more juice left as far as valuations are concerned, and we are incrementally more bullish on Repco, which we have added in our model portfolio. So there, I think the issues in Tamil Nadu has bottomed out. But rest of the pack, one has to be slightly more cautious now as we head into future quarters where these rising yields will show their impact on the P&L.
That's a fair caution, I would say, Gautam. Let's get to the next sector, oil and gas. Naveen is here to tell us what to expect.
Well, the oil and gas space earnings are going to be quite interesting in Q3 given the fact that the oil prices have inched up 19% on a quarter-on-quarter basis. So the biggest beneficiaries are clearly going to be the upstream companies, which will be seeing an increase in realizations in terms of oil as well as rice prices, increasing their revenue as well as the margins. On the other hand, downstream companies, they will have to bear the brunt of the higher oil prices, which will hit their marketing margins. Apart from that, increasing competition from the private players will also have a brunt on their margins. On the other hand, gas stocks, over there the realizations are expected to improve, and that will be clearly reflecting in the margins of these companies. Reliance, the big boy, will be seeing some bit of a pressure in terms of the gross refining margins. Talking about the numbers, Reliance revenues are expected to grow by 11%. On the other hand, ONGC, the clear beneficiary of the increase in the oil prices, over there the revenue is expected to jump by 22%. In fact, EBITDA is expected to jump by 26%. Margin pressure will be clearly seen on the OMC companies, the likes of IOC as well as BPCL, wherein we will be seeing margin compression. Just as a disclosure, Reliance owns the company which runs the channel that you are currently watching by.
Okay. Well, commodity business, but Sanjeev, what will you persist with in this? Will there be a blockbuster earning from Reliance? Will it be a complete avoid on oil refiners like HPCL?
Yeah, so clearly it will be the upstream companies, ONGC and Oil India. I think they can actually pleasantly surprise on the, better than expected, because they have the advantage of rising crude, and I think the subsidy burden must be at the lowest. But the real dark horse again would be gas utilities. I think IGL will come out with stellar numbers. It has been on a roller coaster, and I don't see any let up this time. For Reliance, I think the GRMs will hurt, but there was some close down, and some of the naphtha sales may have been affected for some time, which they had closed down some of the plants. So it will be mixed bag, but like we said, our preference would be on the upstream companies.
Okay, Sanjeev, thanks for that. Let's go across to the next sector, and this is telecom. I don't know about performance, but it will be sure as hell interesting to track. Ronit is here with what to expect. Ronit.
So expect another weak quarter for the telecom companies led by the interconnect usage charges. They have been cut by around 57%, and remember, this will affect the EBITDA of Idea as well as Bharti Airtel by close to 10%. But one company's pain is another company's gain. Reliance Jio will gain from the cut in interconnect usage charges, and we expect the EBITDA to jump in this quarter. Moving on, looking at the average revenues per user, we expect the downtrading to continue in Q3 FY18 as well. Now, if you look at the Bharti Airtel's average revenue per user, from the highs of 196 in Q1 FY17 has come to around 144 in last quarter, and we expect it to go even lower to around 127 rupees. Moving on to Idea, there also we expect a big cut in the average revenue per user coming in Q1 FY17. The ARP was around 180, and its last quarter was around 132. This quarter we're expecting an ARP of around 118. So on the back of all this, we're expecting a weak quarter going ahead for the telecom companies.
What an understatement, Ronit. Weak quarter. Yes, agree. We'll take a break. On that, coming back, we have more sectors to look at, from cement to capital goods to realty, liquor. All that coming in a minute. Stay tuned. Welcome back to our quarterly special quarter talk. We are discussing various sectors and what you can expect in terms of quarterly performance. Nigel D'Souza is here to tell us what to expect from cement, and cement had a horrible year ago quarter. Nigel.
Well, quarter three for the cement companies was supposed to be super, but unfortunately there were a couple of headwinds really that came in the way. What were they? First, there was a partial pet coke ban. Then we didn't have really demand coming to the fore. There was a sand mining issue, and also input costs did spike up, and that's what's really going to spoil the party for various cement companies. What will look good though is volumes. That's going to come on a low base. We're working with a volume growth of roughly around 10% for the industry on the whole. Looking at individual stocks though, ACC, they'll gain. Why? Because they have capacities that are coming on stream. So both their volume growth as well as EBITDA per ton, you should see a double-digit growth over there. Ambuja Cements as well, double-digit growth is what you're working with. Even EBITDA per ton should spike up. For Shree Cement, things will not be so good. The volume should grow by nearly around 8%, though their EBITDA per ton will get hit because they had the highest amount of exposure to pet coke, and there was a partial pet coke ban in the past quarter.
Nigel, thanks very much. Gautam, what is your sense on cement? Will we see strong numbers?
I think cement, barring ACC and Ambuja, as your person was mentioning, rest of the pack will not have much of excitement, particularly this quarter. While volume growth is around for the pack as a pack put together will be around 5-6%, but cost pressures are going up. So going forward, given where valuations are, unless volumes pick up substantially from where we are, valuations look a little bit unjustifiable at this moment of time. So ACC and Ambuja are obviously expected to have a very strong quarter on the low base. We are expecting a decline in Ultratech because of the movement in line items below EBITDA because of the GP acquisition that they have done. We are in fact expecting almost 89% YOY decline in profits. So I think cement as a quarter will be rather lackluster, while the reported growth for profit as a whole put together will be somewhere around 20-21%. But that will largely be led by these two companies, ACC and Ambuja.
Gautam, you're so right about valuations every time you say that word, and the market is so intent on ignoring that because of the liquidity tidal wave. But one sector which was ignored but is now coming back into fashion is capital goods. Anisha is here to tell us whether capital goods and power are sectors that will arrive in the third quarter.
Well, yes, base effect should come into play for all the capital goods companies, and that's why we are looking at a double-digit growth in quarter three. We are expecting order inflows also to see major bump up, because remember the likes of L&T recently told on our channel that the ordering has picked up considerably in the last 2 months, and that is what we have seen in space of road, T&D and railways as well. Motilal Oswal says that for capital goods, the performance will be led by Larsen & Toubro, which is expected to show a 47% earnings growth. Also, the order inflows should improve sequentially, though year on year it remained muted. CG Power, Cummins are all expected to show a double-digit growth. In terms of the power sector, not much has improved in terms of generation year on year or power PLF levels. We're expecting the likes of NTPC and Power Grid to continue reporting strong set of numbers given their setup and regulated equities. But on the flip side, the IPPs like CESC and JSW Energy might report weak and muted earnings. Back to you.
Anisha, thank you very much for that. That is infrastructure and power. Sanjeev, what's your sense here? Lots of beaten down names, but as Lata mentioned, they're starting to come back into fashion. Numbers have to match up though.
Well, yes, I think this quarter and we've seen a definite re-rating on a lot of the power companies on the back that most of the issues on environment and other issues have been sorted. Power prices have started to perk up, and I think some of the power assets are at the best levels they've been. So I think Tata Power is in for a re-rating. We might see an uptick on their numbers. JSW Energy and Adani Power is something where if you are looking to buy, they could be surprising on the upside. NTPC and Power Grid will be regular performers. We think NTPC will report strong volumes, and that will be accompanied by the numbers on the margin front, which can also be on the upside. Siemens and L&T continue to be the inordinate beneficiaries of power equipment. You could add an ABB, which has very low debt and where the order inflow from the parent has been very, very strong. So it would be in that order on both the utilities and on the distribution.
Okay. Actually, we are coming to the last few minutes on the show. So, Sonal, you will have to wrap up a couple of sectors together. Tell us some highlights of what we can expect from realty, media and liquor.
Well, I'll start with the real estate sector. Credit availability in this sector is expected to be low, but bigger companies are expected to get loans at cheaper rate. In terms of Godrej and DLF, we're expecting better sequential sales because remember, DLF had started its sales again on November 1st, 2017. However, overall sales will majorly be driven by ongoing launches because there were no new launches due to rarer and weaker demand conditions. Going to media sector, well, television ad spends have gone up by 13 to 14% on a yearly basis due to lower base, but print media still faces the wrath of GST, and so the ad spends are expected to be lower. If we talk about multiplexes where occupancy and profitability is expected to go lower, although Q3 is a good season, but the delay in release of Padmavat will hit their profitability. If I go stock specific for Z Entertainment, we are expecting 17% growth in ad revenues on like-to-like basis, but higher operating costs, which will impact their margins. Going to liquor, this time it's expected to be in high spirits. For United Spirits, we're expecting a revenue growth of 2%, and there'll be a decline in volumes of around 9%, but if remove the impact of franchising, there is expectation of a 3% volume growth. Even for United Breweries, there is a 14% revenue growth expectations driven by 8% growth in volumes. So overall looks good for the liquor sector. Back to you.
Okay, that's a bunch of sectors and some of them have gotten very pricey like liquor. So Gautam, pick any one out of this and tell us your favorite stock here which still has value.
Has to be liquor, and whether it has value or not, I don't know, but the way the earnings are shaping up for liquor companies, I think this is a sector which is going to surprise. Actually, there is a holy trinity there. Price environment has improved substantially. More number of states are granting price hikes to them. Mix is improving relentlessly. There is a continuous premiumization for both United Spirits and breweries, and to add to that, you have a raw material which is declining after a long time. So this makes for a very heady combination. Price, mix and raw material all put together. If they're able to deliver another 15-16% margin, which they delivered last quarter for a couple of more quarters, then I don't think market will fuss too much about 1 year forward valuations over there, because the operating environment is changing very substantially for that sector.
Okay, Gautam picked liquor. Sanjeev, if I can ask you to tell us the other two, from the other two areas, if anything stands out, media, real estate?
Yeah, so real estate and three of my top picks have been huge outperformers. So it continues to be Godrej Properties on the back of execution and the lease and build model which they have. Their volumes can show a strong uptick. It will be DLF second, and I think Shobha will again surprise on both the volume and the margin front. These three in that pecking order would be outperformers. Even though I think the prices have run up quite a bit, we would still use any decline because we think real estate can be the sector of 2018 due to this massive wealth effect on equities.
Okay, gentlemen, we are completely out of time. Thank you very much for giving us your special comments on how this quarter might pass. The important point is the minimum expectation is 18%. Sanjeev would say at least 15%. That's the bar that this earnings season has to cross. Let us see if this quarter turns out to be that sterling double-digit quarter. Thanks for watching.